These are the top 7 ways to increase your credit limit, including methods to build a stronger relationship with your bank and strategies to increase your income and credit card usage so the bank sees you as a valuable credit card holder that they need to keep satisfied. First, you want to make sure you're making deposits into that bank's savings and brokerage accounts. Let's take a look at a PenFed credit card holder, for example. This person had a Power Cash Rewards Visa card for just over 6 months. Their starting limit was $15,000. They only put regular use on the card in the amount of a few $100s per month. They never made PenFed their primary bank account, but what they did do was make numerous deposits into their PenFed checking, savings, and money market accounts. After doing that, they requested an increase and were approved for $10,000, bringing their limit all the way up to $25,000. Another person was able to take their Bank of America customized cash rewards card from $11,500 to $16,000 after requesting a credit limit increase. They already had a checking account with them for several years and used it frequently to pay bills. They truly felt that having a deposit account or Merrill Lynch investment account with significant activity and substantial deposits really helped to get approvals and credit limit increases with Bank of America. Here's another example. This individual had their Discover Miles card for 10 years, and the whole time they were only able to grow their credit limit to $5,500. They were about to threaten to leave altogether, but decided to open a checking and savings account with Discover. That turned out to be a great decision because they were able to double their credit limit to $10,500 within a year. The banks are in business to make money, and any financial product that they offer is profitable for them. So it stands to reason that if you use more of their products, they will look at you more favorably. Obviously, it needs to bring value to you and make sense for your situation. A high yield savings account may earn over 1% interest, but your bank might charge 5% on a loan or 18% on a credit card, meaning that the amount they give back to customers is just a small fraction of what they may potentially earn. It's really good to identify what offers and features your bank or credit card issuer is giving you and use everything that makes sense for you. This helps build a relationship with them by putting more money back in their pockets. The next thing you can do is keep hard credit inquiries to an absolute minimum. Having around 5 inquiries within a 2-year period is a good target to shoot for. Some credit card issuers are more inquiry sensitive than others. For example, Citi seems to really care about how many recent inquiries you've had on your credit report. Every cardholder that I've come across who was approved for a limit increase with them had 3 or fewer hard credit pulls on their file in the previous 6 months. Accumulating too many inquiries too quickly tells the banks you're desperate for money and a high risk for racking up debt and maxing out your cards. They won't run the risk of doing business with you when they see red flags on your account. Before you request an increase on any card, you want to do a quick search and verify that that card won't trigger a hard credit pull when you request an increase. This will help you avoid damaging your credit score and weaken your position when applying for future credit increases. The next thing you can do is set up recurring direct deposits with that particular bank. You can tell how much banks value direct deposits by how large the sign-up bonuses tend to be. The best bonuses go from $100 all the way up to $1,000. One person stated that Bank of America had their credit card stuck at a $1,000 limit for around 2 years. They noticed that they kept receiving offers in the mail to open a checking account with them. They finally caved in after Bank of America offered $300 back after they completed $4,000 in direct deposits. They ended up earning the sign-up bonus and they were actually happy with the checking account. They started feeling confident after getting that quick win and decided to go for an increase on their old credit card. About 20 seconds after submitting the request button, they were awarded a $3,000 credit limit increase. Here's another example with Chase Bank. This person had one goal for the year, and that was to get approved for a Chase Sapphire Preferred card. After fulfilling that goal, they were content. They were in the garden for the rest of the year. That was until they logged into their account and noticed that Chase had doubled the limit on their Chase Amazon card from $4,500 to $9,000. They strongly believed it was because of their banking relationship with Chase. See, the thing is, in the previous summer, they opened a savings and checking account with Chase and started running all of their direct deposits through them. And that's the point. Direct deposits are a great way to strengthen your relationship with a bank. I think banks like direct deposits for several reasons. They have intimate knowledge of your banking history. Direct deposits guarantee more money for them to loan out at higher profit margins. And you're somewhat restricted to their ecosystem of financial products since it's much easier to transfer balances and redeem rewards into accounts within the same bank. The next method is using a balance transfer offer. Most banks will send you this offer occasionally throughout the year. A Capital One cardholder was able to initiate a balance transfer to move debt from a completely different card onto their Quicksilver card. This generated extra cash flow without having to swipe the card. This particular offer had no transfer fees, so they were able to pay it off before the next due date and avoid paying any interest on the $4,600 they transferred. That helped them greatly by pushing their monthly usage up to achieve a $3,000 limit increase. This is just another money-making scheme from the bank that you may be able to use in your favor. Balance transfers typically charge between $5 to $10 plus 3 to 5% of the amount transferred. That's a decent profit even before you factor in the monthly interest they usually collect on large transfers, since most people won't be able to pay it off before the due date or interest-free period. We're about to get into the most important methods that really move the needle on getting credit limit increases. But if you're getting value from this, please hit the like button. Also, if you want those 6 free stocks from Webull for a limited time, Webull will give you 6 free stocks when you open a new Webull brokerage account and put at least 1 penny in that account. They'll give you 6 free stocks valued all the way up to $12,600. So click on the link in the description to get that free money. Next, you should consider making manual credit limit increase requests. You definitely have to be mindful about making requests because they can sometimes trigger hard credit pulls. You'll want to seek out what most people call soft pull language. With soft pull language, you'll see wording like asking for an increase won't affect your credit score. With hard pulls, on the other hand, you'll see language like you authorize us to obtain a copy of your credit report. If you see that and you're sensitive to new inquiries, let's be honest, most of us are, then run the other way. I recently covered one person who got really serious about growing their Quicksilver card limit, and just take a look at this table showing where they submitted manual increase after manual increase to consistently grow their Quicksilver card limit. I can even tell you from personal experience, I increased my Quicksilver card limit from $15,000 to $16,000, and that was only after forcing the issue and manually requesting it. I've also had success increasing the limit on my Amazon store card, again, every time I had to ask for it. I even recently took a poll, and even though it was a decent split, most of you guys told me that your credit limit increases were automatic. Automatic increases are definitely ideal since they never trigger that dreaded hard credit pull, but I still think if you're trying to grow your limit faster and by larger amounts, then deliberate manual increases are a better route to go. Next, your annual income plays a huge role in your starting credit limit and the size of any limit increases after that. Your income tells the bank how much you can afford to repay. It's important that you always update your income with each credit card issuer when it increases. Whether it be a raise at work or a side hustle or a business, it all counts. Also, a lot of people still don't know, but if you're 21 or older, you may include another person's income that is available to you. If you're under 21, you may consider the amount of another person's income that is regularly deposited into your account. And this is straight from Discover Card's application page, and it's the same for all credit cards. Income is so important that most banks, mostly credit unions like PenFed, will ask for proof of income before extending credit to you. Usually, you'll have to submit pay stubs or W-2 forms. One Chase cardholder said they received a message on their account to update their income. A few months later, after they updated it, they received an automatic increase. So this is just another example of why it's always good to look for legitimate ways to boost your stated income. So the best and proven method to increase your credit limits, and it's not even close, is consistent high usage on the credit card you're trying to grow. Over 30% of you guys told me that not using your credit card enough was the most common reason for getting denied for a limit increase. So it's a huge issue. Take a look at this monthly usage by a Quicksilver cardholder who strategically used their card in the months leading up to each limit increase request. The results speak for themselves. The more usage, the better. But the sweet spot seems to be using over 30% of your credit limit for a sustained period of time, most likely 3 to 6 months. Also, letting at least a portion of your balance report to the credit bureaus has proven to better your chances. expenses. To make sure that happens, you can just pay your balance by the due date. You'll need to make that card your singular focus and run all transactions through it. Credit card issuers make money in 3 major ways: annual fees, interest/late fees, which I hope you don't have, and interchange fees. The interchange fees could very well be their largest income source. Those are fees they charge merchants when you make a purchase, and they're usually between 1 to 3% of each transaction. So you can see why usage is highly important to them. Plus, the more you use the card, the more likely you are to fall victim to all of those other fees. Using the balance transfer feature that we discussed earlier would dramatically increase your usage. Adding an authorized user that you trust could also potentially double the usage on your card. Plus, you'd automatically be able to claim their income on your account. Usage is so important to the banks that the #1 reason credit cards get canceled is due to inactivity or non-usage. To avoid cancellation and learn how often you need to use most cards, check out this video next. Thank you for watching, and you have a good one.